Hey everyone, welcome back for another deep dive.
Always exciting to jump into a new company.
So today we're going to be taking a look at Associated Alcohols and Breweries, Ltd.
AABL.
For short. Yep, AABL. And what's really interesting about this deep dive is that we've got a ton of different source material.
We do.
Like we've got investor presentations,
No.
official statements to stock exchanges, and we even got our hands on an independent auditor's report.
It's like a puzzle.
Yeah.
Putting all the pieces together to get the full picture.
And that's exactly what we're going to do today. So AADL, for anyone who's not familiar with them, is trying to really make a name for themselves in a really exciting industry.
An industry that's definitely on the rise.
Absolutely. All right, so to kick things off, maybe you can give us a quick snapshot of who ABL is and what they do.
Sure. So ABL, they're a fully integrated player in the alcohol space. And what that means is they're involved in every step of the process.
Okay, so from the raw materials to the finished product.
It's exactly from sourcing the grains to bottling the final product you see on the shelves.
So they're not just another alcohol company. They're like a one-stop shop.
Right. They've got their hands in everything.
Got it. And when it used to their product portfolio, are we talking about just one type of drink, or do they have a variety of offerings?
They've got a whole range of categories they cover. They've got your IMFL, Indian-made foreign liquor.
Ah, so that's like your whiskeys and vodkas and gins.
Exactly, all the usual suspects. Then you've got IMLO, Indian-made Indian liquor, which is specific to the Indian market.
Interesting. So that's more of a traditional kind of category.
Yeah, often includes country spirits, unique to India. And then they also produce ENA extra neutral alcohol, which they actually supply to other beverage companies.
Wow, so they're even supporting their competition in a way.
In a sense, yeah. It's a smart way to diversify their revenue streams.
And they're not stopping there, right? They've also recently ventured into a new segment.
Oh, that's right. They've jumped on the ethanol bandwagon.
Ethanol. So we're talking about biofuels here.
Yep. It's a growing market in India, and AABL is strategically positioning themselves to capitalize on that.
Makes sense. So they're not just sticking to the traditional alcohol market, they're branching out and exploring new avenues.
Absolutely.
Okay, so it sounds like they've got a pretty diverse business model. And one thing that really stood out to me when I was going through their investor presentations was their impressive growth over the past decade.
It's hard not to be impressed by their numbers.
Yeah, seriously. So in the last 10 years, they've seen a 14% CAGR in revenue.
That's compound annual growth rate for anyone who's not familiar with the term.
Thanks for clarifying. And their profit, even more impressive, 24% CAGR.
They've been growing their top and bottom line at a really healthy pace.
Yeah, that definitely caught my attention. All right, so we've established that they've got a solid track record of growth. But let's fast forward to their most recent performance, their Q2 results for fiscal year 2025.
Right, let's dive into those numbers.
Okay, so first things first, revenue growth, 49% year over year.
Yep, they're definitely on a roll.
That's a pretty significant jump. So what's driving that growth?
Well, a combination of factors, their expansion into new markets, their focus on premium products, and also the overall growth of the alcohol market in India.
Okay, so they're riding a wave, but it's not all sunshine and rainbows, right? Because I know that there have been some challenges as well.
Yeah, there's one big challenge that's been impacting pretty much the entire industry.
I'm guessing you're talking about the rising cost of grain?
Bingo grain prices have gone up like crazy, 21% year over year.
Ouch! So that's definitely hurt their bottom line.
And it has put some pressure on their profitability. For example, their EBITDA margin for Q2 stands at 10%.
EBITDA margin, just a reminder for our listeners, that's essentially a measure of how much profit they make for every rupee of revenue.
Right before accounting for things like interest and taxes.
So 10%, that's still a healthy margin, but it is down slightly from the previous year.
Yeah, those rising input costs are definitely having an impact.
So they're facing some headwinds, but they're not just sitting back and accepting these challenges, are they?
Not at all.
Yeah.
They're making some very strategic moves to counter these headwinds.
Okay, give us the inside scoop. What are they doing?
Well, first off, they're going all in on geographical expansion. They've got their sights set on the Maharashtra market.
Maharashtra, isn't that the biggest alcohol market in India?
It's one of the biggest, for sure. So capturing even a small slice of that pie would be huge for them.
That's a bold move. So they're thinking big, but they're not just expanding their reach, they're also expanding their product offerings.
Yeah, they're focusing on premium products because that's where the growth is.
Premiumization, we've been hearing that word a lot lately. What exactly does it mean in the context of the alcohol industry?
It's basically the trend of consumers trading up to more expensive, higher quality alcohol. They're willing to pay a premium for a better experience.
And AABL is tapping into that trend?
Big time. They've already launched a few premium products, and they've got a ready-to-drink or RTD product in the pipeline for Q3.
RTDs, those are getting really popular these days, especially among younger consumers.
They're convenient, and they come in a variety of flavors. So it's a smart move by AABL to jump on that bandwagon.
So they're expanding geographically, they're focusing on premium products, but they're also doing something else that's really important.
What's that?
They're focusing on operational efficiencies.
Ah, yes.
Yeah.
That's key to combating those rising input costs.
Exactly. They're streamlining their production processes, optimizing their supply chain, basically doing everything they can to squeeze more value out of every rupee spent.
They're not just reacting to the challenges, they're proactively trying to shape their own destiny.
It's like they're saying, we see the obstacles, but we're going to find a way to overcome them.
Exactly. That kind of mindset is essential for success in any industry.
All right, so we've talked about their overall strategy, but let's zoom in on a specific region where ABL has been particularly successful, Kerala.
Ah, Kerala, a fascinating case study in ABL's strategic thinking.
From what I've read, they've achieved something remarkable there. They've sold 1 million cases in less than 4 years.
And that makes them the fastest brand to reach that milestone in the region.
Wow, that's impressive. So how did they pull that off?
Well, they really understood the market dynamics in Kerala, and they tailored their strategy accordingly.
Give us the details. What was their secret sauce?
They launched a product called Lamount, a white brandy that was specifically designed for a price-sensitive market.
Okay, so they were catering to the budget-conscious consumer.
Exactly. But here's the interesting part. They didn't neglect the premiumization trend either.
Oh, so they were playing both sides of the field.
Precisely. They're aiming to generate 50% of their Kerala revenue from premium products.
So they're catering to both the value seeker and the luxury consumer.
It's a smart, two-pronged approach because Kerala, while price-conscious, also has a growing segment of affluent consumers who are looking for premium offerings.
So they're basically covering all their bases.
It's a testament to their deep understanding of consumer behavior and how it varies across regions.
And this success in Kerala actually ties into a much broader trend that's shaping the Indian alcohol market as a whole.
It does.
And that's
The rise of the young Indian drinker.
the rise of young Indian drinkers, a generation that's embracing alcohol like never before.
It's a huge demographic shift, and it's having a major impact on the industry.
So we're not just talking about a small group of people here. This is a significant portion of the population.
Absolutely. India has one of the youngest populations in the world. Over 67% are between the ages of 15 and 64.
Wow, that's a lot of young people.
And here's a stat that really highlights the trend. Over 88% of Indians under 25 are already either buying or consuming alcohol.
88%. That's incredible. So it's safe to say that alcohol consumption is becoming increasingly mainstream among younger generations in India.
Definitely. And this isn't just about quantity, it's also about changing preferences. This younger generation is more experimental, they're more open to trying new things, and they're definitely driving the premiumization trend we talked about earlier.
So they're not just content with the same old drinks, they're looking for something more, something special.
Exactly. They want higher quality,
Yeah.
more unique flavors, a better overall experience.
And that's where AABL's focus on premiumization becomes even more strategic.
Right. They're positioning themselves to cater to this growing segment of discerning drinkers.
Okay, so we've talked about the rise of the young Indian drinker and AABL's strategy to capture this market. But let's bring it back to their big goal, their ambition to become a top 10 player in the Indian alcohol market. Do they really have a shot?
Well, they certainly have the drive, and their strategy seems to be working so far. But to really assess their chances, we need to look at the specifics, the tangible moves they're making.
All right, let's break it down. Where do we start?
Let's start with their geographical expansion. We talked about Maharashtra being next on their list.
Right, that massive market with so much potential.
Exactly. Maharashtra is like the New York City of the Indian alcohol market.
Yeah.
It's huge, it's diverse, and it's incredibly lucrative.
So capturing even a small share of that market would be a major win for AABL.
Absolutely. It would significantly boost their revenue and market presence.
Okay, so geographical expansion is key, but it's not just about expanding their reach, it's also about expanding their product portfolio to appeal to different segments of this evolving market.
Right. They need to have the right products to meet the demands of this new generation of drinkers.
And we've already seen this dual approach in Kerala, targeting both the price-sensitive and premium segments. But what are they doing at a national level to cater to these diverse tastes?
Well, they've been busy launching new products that tap into the premiumization trend. One example is Nicobar, their super premium gin.
Nicobar, I've heard of that. It's supposed to be really good.
It's crafted with unique botanicals and positioned as a luxury offering for the discerning consumer.
So they're really going after that high-end market.
And they've got another premium product in the pipeline, Hillfort, a blended malt whiskey that's set to launch soon.
Hillfort. Interesting. So they're building out their premium portfolio.
And these aren't just your average drinks. They're designed to elevate the drinking experience, appeal to a more sophisticated palate, and of course, command higher prices.
So it's not just about offering more options, it's about offering a premium experience.
Exactly. It's about creating a brand that resonates with consumers who are looking for something special.
And I've heard whispers that they're even considering venturing into tequila.
They are. It's still in the exploratory phase, but it shows they're not afraid to explore new territories and cater to evolving consumer preferences.
Tequila in India. Now that would be interesting.
It would be a bold move, but it could pay off if they can tap into that growing demand for premium spirits.
So they're thinking outside the box. And let's not forget about their ready-to-drink product that's set to launch soon.
Ah, yes. The RTDs. They're gaining massive popularity, especially among younger consumers.
And AABL is wisely jumping on that bandwagon.
It's all about staying ahead of the curve and anticipating what consumers will want next.
Okay, so we've covered geographical expansion, premiumization, and RTDs, but we can't forget about their ethanol venture. That's a whole different ballgame.
It is. And it's a smart move for a few reasons.
Yeah, we touched on it earlier, but it's worth revisiting. What's their strategy there, and how does it fit into the bigger picture?
Well, they see ethanol as a natural extension of their existing expertise in distillation and fermentation. It's a way to diversify their revenue streams and leverage their capabilities in a new and growing market.
So it's a strategic diversification play.
Exactly. And here's the kicker. The Indian government is pushing for increased ethanol blending with petrol, which is creating a huge demand that AABL is perfectly positioned to meet.
So they're aligning themselves with national priorities while also tapping into a profitable market. Talk about a win-win.
It's a smart move. But of course, we can't ignore the challenges. The rising grain prices we talked about earlier are a real concern. How are they tackling that?
That's the million-dollar question.
They're approaching it from a couple of angles. First, they're using hedging strategies to lock in prices for raw materials in advance.
So they're trying to protect themselves from price volatility.
Exactly. Think of it as insurance against sudden market fluctuations.
Smart move. So they're trying to control what they can control.
And they're also focusing on operational efficiencies, streamlining their production processes, optimizing their supply chain, basically doing everything they can to squeeze more value out of every rupee spent.
So it's a combination of financial savvy and operational excellence.
Exactly. They're not just hoping for the best. They're actively managing the situation and trying to minimize the impact of these external factors.
And let's not forget about their secret weapon, their partnerships.
Ah, yes. Their collaborations with industry giants like Diageo and Imbrew.
Those must be giving them a serious edge.
Imagine having access to the expertise distribution networks and brand recognition of companies that have been in the game for decades. That's exactly what these partnerships offer AABL.
It's like they've got seasoned mentors guiding them through the maze of the Indian alcohol market.
Precisely. It gives them credibility, opens doors to new markets, and provides them with valuable insights that they wouldn't have otherwise. So to answer your earlier question, yes, I think AABL has a legitimate shot at cracking the top 10.
Their strategic moves seem to be well thought out, and their partnerships are definitely a major advantage. But do their numbers back up their ambition? I mean, revenue growth is great, but what about their overall financial health?
That's the million-dollar question. And the answer is it's a bit nuanced.
Okay, I'm intrigued. Give it to me straight. What's the good, the bad, and the ugly? Okay, so their financials, what's the verdict?
Well, like I said, it's a bit of a mixed bag. There are definitely some strong points, but also some areas where they need to be careful.
All right, let's start with the good news. What are their key financial strengths?
One of the things that really stands out is their gross profit margin. It's been consistently above 40%, which is a great sign.
Gross profit margin, just to remind everyone, that's the profit they make after deducting the direct costs of producing their goods.
Exactly. So it tells us how efficiently they're managing their production costs and pricing their products.
And a 40% margin, that's pretty healthy, right?
Yeah, it's a good indication that they're running a tight ship on the production side.
So they're efficient at making their products. What about their operating profit margin? That takes into account other expenses like marketing and administration.
Right, that one's a bit lower. It's hovering around 10%.
So they're still making a profit after covering all those operating expenses.
Exactly. But as we discussed earlier, those rising input costs are definitely having an impact.
Yeah, 10% is still respectable, but it's something they'll need to keep an eye on.
Absolutely, especially if those grain prices keep going up.
Okay, so they're profitable, but how efficiently are they using their assets and equity to generate those profits?
That's where we look at return ratios like return on equity or ROE.
ROE, a key metric for investors.
For sure. And ABL's ROE has been steadily climbing. It's currently around 12%.
So that means they're effectively using shareholder money to generate profits.
Exactly. It's a good sign for investors.
And what about their return on capital employed, or ROCE? That gives us a broader picture of how well they're using all their available capital.
Right? ROCE is a good indicator of overall capital efficiency. And AABL's ROC is actually quite impressive, sitting at around 23%.
23%.
I know.
Wow. So they're making smart investment decisions and utilizing their resources effectively.
It seems so.
Yeah.
They're definitely making the most of their capital.
All right, so from a financial standpoint, it sounds like they're in a pretty good position. They're
Yeah.
profitable, they're managing their costs, and they're using their capital wisely. But looking ahead, what are some of the potential roadblocks or challenges they need to watch out for?
Well, we've talked about those rising input costs. That's a big one.
Yeah.
And it's not something they can easily control.
Right, grain prices are a major factor in their cost structure, and we know they're using hedging strategies and optimizing their operations to try and mitigate that risk.
But it's a risk that's not going away anytime soon. So they'll need to stay vigilant.
Absolutely. What else should they be watching out for?
Their ambitious expansion plans, while exciting, also come with their own set of challenges.
Expanding into a new market like Maharashtra is a huge undertaking.
It requires significant investment, careful planning, and a deep understanding of the local market dynamics.
It's a high-stakes game with no guarantees of success.
Exactly. And then there's the competitive landscape. The Indian alcohol market is fiercely competitive with both established players and new entrants all vying for market share.
So they're not just battling rising costs, they're also battling for their place in a crowded market.
Right. And that's where their strategic partnerships become even more crucial.
Those relationships with Diageo and Imbrew get them access to expertise, distribution networks, and brand recognition.
They're invaluable assets in such a competitive environment.
But maintaining those relationships and making sure they're mutually beneficial is key.
Absolutely. They can't take those partnerships for granted.
So to sum it up, AABL's future success hinges on a few key factors: managing those rising input costs, executing their expansion plans, effectively navigating the competitive landscape, and nurturing those all-important strategic partnerships.
It's a lot to juggle, but they seem to have a good handle on things so far.
Well, this has been a fascinating deep dive into the world of AABL. We've covered so much ground, from their history and strategic moves to their financial performance and the broader industry trends.
It's been quite a journey, and I think we've gained some valuable insights into this ambitious company that's trying to make its mark on a booming market.
We've seen their strengths, their challenges, and the factors that will likely shape their future. And while we can't predict the outcome with certainty, one thing is clear: AABL's story is far from over.
It's a story that's still being written, and it'll be interesting to see what the next chapter holds.
And on that note, we'll wrap up this deep dive. Thanks for joining us.
Always a pleasure.
Yeah.
Until next time, we'll